I apologize. Frank had come in earlier, and I had meant to show this, but we had to go in order for questions. Frank had to leave, but he asked a question: how often does the market sentiment update? Frank, it updates every day. All right, so the market sentiment tool is our tool for evaluating 13 broad-based indicators. And then fences are set on those indicators based on the historical performance. So right here, we're looking at the put-call volume ratio. And as we see, when the put-call volume ratio gets down to 0.4, as it is right now, we're at 0.42, it very rarely goes lower than that. So this is a bearish indicator. Why? Because it means when it hits this level, it used to have to start reverting back to the norm, which means what? Which means you're going to see more call volume start to appearing to get this ratio back up closer to 0.8 or 0.9. Okay? So this is a historical histogram over time of all the data points for the put-call volume ratio. And you can just see here over on the left that once it enters into this range of 0.4, 0.42, it very rarely goes any lower, which means it wants to come back up this way. And to come back up this way means that more calls need to start getting bought to get this ratio back closer to 1. And when it does, it'll start going back into this range as well. It updates every day. And I wish I could have gotten to your question sooner, because when we looked at it at the beginning of the presentation, we were discussing Dennis's question related to the delta of the different spreads and positions he was looking at. The date on the market sentiment tool was February 4th, somewhere between 4:45 and 5:10 p.m. Eastern time. This was updated with the new numbers. It only updates once per day after the close between 4:45, Frank, and about 5:10, 5:15 p.m. Eastern time. Here we are at 5:45 p.m. Eastern time, and we got updated during our other discussions as well. All right, Sam, I wasn't ignoring you, but for some of the comments, Sam just was offering some of his recent trades. He says he's a naked put right now in Apple. It's a monthly at 120, so it's out of the money. When we saw Apple was up in the higher ranges, he got 250 for it. And you've got a naked put also at the 137 strike on Apple, which is at a 50% profit right now. And you've got the 140 calls also bought on Apple, and you've got a high return there also. And then you also mentioned another one I'm not familiar with. Is that right? No, that's not right. TSNP. This is about TSNP at 16 calls. My return today is 750%. Wow, the stock closed. Oh, okay. It's the stock closed at 1. Oh, it is this one. Okay, I'm sorry. All right. So yeah, you're talking about Tessero here, low price digital company. In that case, maybe it's yeah, PN. All right. And you rolled your 41 call to 44 on WKHS. In this case, you had a 60-cent profit at the 41 strike and got a $2 credit when you rolled up. Yeah, so Sam's referring to rolling up with the credit in those situations with the covered call, as well as rolling down for a credit, not a debit, with the cash secured naked puts also. It's William. I'm sorry, I was just reading the numbers real quick. Oh, let's go back here. So William's asking an advanced question about the market sentiment tool. I'll probably take Frank's little question there, Sam's comments, and then put this one into our last section here, William. William says, question about the market sentiment indicator. Let's go back to our details. You say, last time we had a light buy, the signal was on 9/24/2020. That's right. SPX was at 32.46. on the light buy. Since that day, we've had 6 bearish sell signals and numerous sell warnings. SPX now is at 38.86, an increase of 20%. I've been using the bearish sell signals as an opportunity to sell into strength and lighten up total equity percentage. It seems like the market sentiment in it doesn't generate very many buy signals. Can you suggest a way I might use the MSI to increase or decrease the percentage of equity holdings in a long-term portfolio? In that case. All right. All right. So, okay. What is he referring to? Now, this is an interesting conversation I had with a gentleman during a coaching session yesterday. We're talking about the market sentiment indicator. And he made a comment about a chart pattern, which as I was looking at the market sentiment numbers, I could see it there just by looking at the numbers and not even need to look at the chart of SPY or SPX. Again, I'm going to see how far back I can go here. Okay, so there's, you said I was seeing light. Oh, I'm so sorry. I am so sorry. There it goes. It escaped me. There's the big buys at the end of March when we hit the bottom. And September, I'm sorry, folks, I went way too far. I didn't realize I'd scrolled back 3 years. I'm sorry for that. There's those buys. I'm sorry. Here's the sell warnings that warned us of the September decline, which is about 8 or 9% he's talking about. And then we got to 32.46 and we saw the light buys. We had 4 bullish triggers, 9 neutral, and then 4 bullish, 8 neutral, and 1 still bearish at this time. And you're saying that since then we haven't really seen. We saw some sell warnings and it dropped down and eased, from 3,500, 35.34 down to 3,400, 34.35, I think. 34.26 was the low. And meander about, we get to 32.69. Okay, so that's, it's almost a 10% drop. That was an October drop, but it didn't trigger again on the light buy side. And we started to move up and pressuring the sell warnings. There's that bearish sell from November 1. And then we hit 2 more recently. Yep, there it was. January 8th, when we dropped from 3,800 down to, where did we go? 37, 70, 36. And now it's back up again. So it's just a small, here's why. The direct answer to your question is, number one, you're not seeing the light buys because it hasn't eased up enough yet. It hasn't seen the easing that would push more into the bullish buy that we've seen in those strong scenarios. And again, I follow my patterns. I follow my rules. And my rules are, when I start to see the sell warnings, I'm looking for ways to potentially adjust my portfolio. I'm not scaling back at this point. I know that's not what you're asking, but let me get to it, Wade. I'm not scaling back at this point. When I start to see 1 bearish sell or 2 bearish sells in a row, at this point, I'm selling calls on my married puts that are in the proper place. Why? Because I'm expecting a pullback and the call will go to 0. I'll get the full premium near the top, but it'll go to 0. And of course, I may be looking to close any of my bull put credit spreads that have a profit, add protection to my diagonal calendar spreads in this case, and manage it that way. Now, we did see some easing, didn't we? We saw a drop down to 37.95 and it went to neutral. Okay, so this is when I might start looking for potential new positions. The market's waffling a little bit, but then we see a few more sell warnings. We drop back down to 3,700. This is a small move, isn't it? And then the market's getting pushed back up and we see these sell warnings again. Okay, now I did open a position the other day for the married puts. And I probably opened it near the top. I'm going to be honest with you, but I'm going to play it 2 different ways in the Fusion portfolio than what we normally do. But I did open a position on MAS and I am bullish on it. And it has earnings coming up, I think it's 7 to 8 days, maybe 9 days, if I remember correctly. And if it starts to move down before then, I'm going to do something a little bit fun with that income method number 12 or 12 and 6 combination. We'll have to see there for the Fusion subscribers right before the earnings as well. So I'm not saying that right now is the time to buy. When it goes into neutral, when I felt we've had a good pullback and it goes back into the neutral territory, I might start buying back in. But there's something interesting about these numbers that we see. And it's what the gentleman during the coaching session the other day mentioned to me as I was explaining I apologize, folks, as I was explaining the chart to him and the indicators as we just looked at it in that case. All right, yeah. And what did we kind of see there? I mean, what do you see in the chart here? Sort of a peak, then the dip, then the peak and the dip, and then this. Specifically, what is usually this pattern called when you see that in that case? And that's what he was talking about. It's sort of the head and shoulders, or the reverse head and shoulders approach. He says he sees that in the market. Well, let's clear that drawing out in that case. And it's harder to see here, but what essentially did we see? I saw it here, the numbers the same way. Here's the 3850s, and we go down into the 3700s, 37.1, and then come back to the 3850s. So we're here right now. And normally you might expect to see that. I'm still expecting a pullback. I'm going to be honest with you. I'm still expecting a pullback in the market as a whole, based on those two bearish signals that we recently saw. And it was about a month ago. I agree. And there was a little pullback, but it wasn't enough. The last time we saw two bearish signals, it pulled back further. Am I saying the market sentiment am I saying the market sentiment indicator is wrong? No, that's not what I'm saying. What I'm saying is there are other outside forces, i.e., stimulus talk, change in stimulus, not changing the stimulus, other ideas that are being put forward by senators for child tax credit or direct payments instead, or enhancing the child tax credit. It's just positive news. The vaccine's coming out, more and more positive news that's moving it up. But it is getting to that extension, I feel personally. And as I mentioned, I bought a married put with only a risk of 4.6%, but I'm confident with the position because it's out 180 days out in time, has a very low risk, and I'm going to collect at least 2 dividends over that time, even though I'm expecting short term, we might see a pullback. Might not be a bad time to do a married put on an inverse ETF as well. And I can't give direct trading advice. This is just my opinion based on following the market sentiment, William, as you know. And so when I start seeing new peaks where the sell warnings were triggered and the sell warning starts to trigger again, that's usually when I'm hesitant to open new positions. I did just defend myself as to why I did open that new position for the Fusion portfolio this week. But again, I might be hesitant. How you doing, Kip? Might be hesitant to open new bull puts next week. And Sam adds that today near the close, he bought puts in SPY for a couple weeks out in time, and he's expecting VXX to move up, the volatility ETF as well. So those are the kind of things you've heard me talk about before. And when I see this and we go back into the neutral zone and the drop wasn't necessarily that big, it's significant, right? From 38.51, 38.53 to 37.14. It's a good move down in a 5-day period, but it didn't really ease much off the tension of this upper level that we're right back to hitting at 38.86. Okay. So that's how I use it. When am I going to start buying in? I think when this goes back to a neutral where I start seeing 3 bullish and it's almost about to trigger the light buy, or absolutely when it triggers the light buy. If we see another pullback, which I'm expecting, by the way, I can't give it. I'm not going to give a time frame or anything, but I'm expecting another pullback based on the market sentiment indicator. It may be delayed and it may be forced up due to continued stimulus talks and things of that nature. If more better news starts coming out about unemployment, and better news starts coming out that the rolling out of the vaccines are helping in most countries, including here in the U.S., maybe this will continue to be pushed up. But it is at that status, and we're seeing hit those new levels. We've seen it ease off a little bit, but not a lot. And we're back to the sell warnings at the peak where we saw it before. And we still have those 2, actually 3, but 2 in a row, bearish sell signals right in our rear view there from a month ago. So this is hesitation time. Again, I'll have to see what the market does on Monday. I should be opening new bull puts, but I personally don't think I'm going to in that case. And Sam also adds last week, he sold his UVXY before the market closed and got a reasonable profit. And you're also looking at buying SQQ and SDOW. All right, fantastic. All right, well, it is 6 o'clock Eastern time. I want to remind everyone that today's material are my thoughts on your questions designed for educational purposes, increasing investing performance and options knowledge. Any stocks or options discussed today should not be taken as recommendations or direct trading suggestions. However, of course, we did mention how we use the market sentiment tool in relation to potentially buying after we see an easing off and get into the neutral into light buy. But when we start seeing that little dip and it goes right back into the sell warnings, that might be a hesitation to open new positions also. Options and stocks do involve risk, may not be suitable for all options investors as well. All right. And that did do what I wanted it to. There we go. If you like some of the tools you saw today, we created a couple of searches on the fly. We saw how one of those searches would have performed with a back test there, but we also looked at how to just do one single strike at a time using the search tool as a search by symbol there for Giles. And we looked at some discussion on Delta. We looked at the portfolio tools and the rollout opportunities, extremely powerful for tracking positions. If you like those tools, you could test out Power Options at any time. Go to powerop.com, just enter your name and email address. You'll have full access to the site for 14 days. The search tool, the 23 different strategies, the research and analysis tools, the portfolio tools, access to all of the archived webinars, and much, much more. No credit card is required, just name and email address, and you get full access. Subscription levels after your 14-day free trial start at $45 per month. We do offer a delayed service. That's the end of day is the $45 per month. So the data is only updated at the end of the day. The delayed service, the data is updated maybe every 15 minutes or so. That's only $65 per month. And the delayed service plus full access to the historical backtesting tools, years of going back to test a strategy or test a criteria set. That total package delayed plus the history is only $100, so it's only $35 more from the delayed. We do offer a real-time service, of course, and the full package of everything on the premium service also. We talked about some of the education at any time. You can go to powerop.com/webinars.asp and access our archived webinars. It's a public page. Most of the webinars on there are free to access, even if you're currently not a trial member or subscriber. However, some are blocked out just for subscribers, but you can scroll through those. But also you can go to our YouTube channel. Just go to YouTube, search for Power Options. You can go right to the site, and many of our videos are public right there. You could run a search right on our channel for naked puts, and you'd see all the videos with the title of naked puts in it. Searching, rolling, adjusting, bull put credit spreads, bear call credit spreads, much, much more is all available there as well. So you can check out those free resources at any time. Now, if you think of any other questions, of course, as we wrap up for this evening, we're going to go through some of our sign-offs here. But if you think of any other questions later on, just remember you can send me an email at any time to support@powerop.com or support@radioactivetrading.com as well. You can also call us during market hours at 302-992-7971. Any trial member or subscriber to Power Options can also schedule a coaching session. That's a 45 to 50-minute phone conversation with myself or Ernie. We'll walk you through the tools on the site, answer any questions that you have on a one-on-one basis, kind of like what we do today, but just more one-on-one interaction with you. And that's available. There's no limit to how many you can have, and it's completely free also. So those are the ways you can ask any other questions. All right. So, William, thank you for your questions. I hope I know that discussion we had about the adding new positions or scaling back on positions with the market sentiment tool maybe wasn't as polished and maybe it wasn't as clear and direct as we wanted it to be, but we got through the basics there. And I hope you enjoy the weekend as well. Stay safe, of course. Sam as well. William says, Chiefs or Bucks, what is the probability delta on each team? I don't know. I haven't looked that deep. I saw some things this morning, but I wasn't really paying attention to it while I was looking at the market futures and things of that nature. It's hard to bet against him, isn't it? But it's hard to bet against Brady Williams. So I'm going to say I'm going to give a 65 to 68% probability on the Chiefs. And, of course, that leaves us with a naturally, of course, that seems high, I know. It's 65% probability to 35 for the Bucks there, but I'm going to say 65, 68% probability on the Chiefs. But I'm not betting on the game anywhere as well. What is the delta on each team? So that would probably be the same there, that situation. That's what I'm going with. We will find out next week if I'm massively right or massively wrong. Kip, you have a safe and fun Super Bowl weekend as well. Stay safe, of course. And Sam says, thank you. Enjoyed each bit of the presentation. Enjoy your weekend. And says to everyone, be safe and keep others safe as well. Thank you, Sam. You stay safe and keep safe as well. Thank you all. Giles, for your questions also, of course, and Dennis for your early questions. Frank, I'm sorry we missed you during the talk, but that'll be available in the archive. We'll get to your question first there, and then we'll delve into the further questions from William. We've got the section on Dennis. We've got Giles and William's section on the naked puts. Then we've got the other discussion there with the market sentiment tool and some of Sam's thoughts. So we've got 3 or 4 segments already set up right there that we'll have split up for you. And I'll start splitting them up possibly tonight, more than likely first thing tomorrow morning. You'll probably see the first 2 webinars posted tomorrow, hopefully by 12 noon Eastern time. All right, take care, everyone. Good night. Have a great weekend. We'll see you soon.